This time, airlines enjoy profitable second quarter as yields stay strong, but is a market normalisation around the corner? And despite all the challenges, the startups keep coming. My name's Graham Dunn, and joining me as ever is airline business editor Lewis Harper. Hi, Lewis.
Hi, Graham. How are you?
Yes, good. But enjoying these summer days, the summer days of the aviation industry, where I guess there's a sort of a slowing of the natural news cycle, but that all comes off the back of the second quarter results, which season that we've seen. And it's been a very interesting quarter, actually. I suppose you've got several trends that have carried on. They're overridingly quite a positive quarter for airlines, but one with some warning signs along the way, I guess.
Yeah, on the positive side, you're right. We're still seeing the much talked about pent-up demand is still a theme at most airlines. They're still benefiting from that. At the same time, while some carriers are above pre-COVID levels capacity-wise, there are still many that aren't. So the three big European airline groups, for example, while maybe one or two parts of them are above pre-COVID levels capacity-wise, they're still largely trending below that. But in some cases, we know well that isn't necessarily all through choice either, because there are still capacity constraints. That when you're a big player in a market isn't necessarily a bad thing in the short term anyway, in terms of what it does to your finances, because there is such strong demand that for what capacity is available, it's selling very well, and we're seeing strong load factors and yields pretty high year on year. But having said that, while the prevailing narrative is a positive one looking into the current quarter as well, I think most airlines are expecting some fairly impressive revenue figures, for example. There is also sort of the first indications, as we hinted at, that we might see of some airlines maybe seeing that pent-up demand falling away slightly as we look certainly towards the end of the year.
Yeah, I mean, I think it's interesting. It has been another very positive period, the strong yields and revenue picture. I sensed there was a kind of, listening to some of the calls that, people were starting to look, at what comes next. And I don't think there's any kind of clear picture of what comes next. And I think, most airlines and executives were saying that they felt, that their airline was very well placed for dealing with what came next. But I think there is, people are starting to think about what might happen with yields, whether they can continue at the levels that they can, and then what happens on capacity as well. And I think what you were saying about capacity is interesting. You have on the Lufthansa, for example, they're in an airline where capacity is still as a whole behind on where it was pre-COVID. A lot of that based on the slower pickup on Asia Pacific routes and a kind of knock on the feeder traffic. Carsten Spohr, the chief executive of Lufthansa, was talking about taking some of the buffer out that they'd had in this year. And I think the other thing to remember, I think probably airlines across the board, is that they had generally put in a bit more buffer in the network. They're perhaps not running things as hyper efficiently as they were before, just to make sure that there was a robustness in the schedules this summer. And Spohr was talking at Lufthansa about being ready to sort of return to more natural levels of efficiency, taking some of that buffer out, as they got confidence in the market that they had. So you'd see some kind of increase, but of course, increasing capacity isn't easy, because there remain wider supply chain issues which are impacting an airline's ability to add capacity.
Yeah, that's right. And we've talked about them before, whether it's, it's pretty common now, an airline chief executive will tell you that on-time delivery for a new aircraft is 6 months late. It's kind of become the normal there. But also, we know well about, the MRO and other issues with engines in particular on several, particularly in the newer generation aircraft. We're talking about, here at Air Baltic, for example, it's not just one or two aircraft. I think they said in the second quarter, they were on average 11 of their A220s were grounded at any one time. So it's a huge proportion of their fleet, probably about 25%. So yeah, these are big capacity constraints that most people can't see ending, certainly in the next 12 months or so. I think it's kind of a theme that everyone is having to deal with. And yeah, you talk about that buffer coming out. I mean, the other big issue, obviously, a lot of airlines facing around the world at higher costs, and it certainly will help if, like Spohr said, there's the level of normalisation where you don't feel you need that extra capacity buffer in there to maintain normal operations. So that would probably help on the cost side, but certainly I doubt that will be enough to offset, with the impact of inflation on salaries and everything. It's been a period where these high yields and revenues have been more than offsetting those extra costs. I think what will be interesting to watch is what happens when those yields drop, and I think that's going to be one of the key themes of the winter, really. In many ways, this is the normalisation of the market. So, we know we talked a lot historically about how the airline industry isn't awash with airlines that make money. When you look at the industry profitability as a whole, it's often driven by a small number, particularly North American carriers that make big profits, and a lot of other carriers are often on the edges of profitability and losing money. So it's not a new thing, but I certainly feel like the high cost environment is going to become much more noticeable, I think, for a number of carriers. And when you look away from the last 3 years, that's I guess nothing new. But I guess the key dynamic there is that a lot of carriers have extra debt they've taken on during COVID, so managing in that environment is probably going to be a bit harder for them. But we're not there yet, as you say, and I guess it's not every airline that is talking about that being an imminent threat, or indeed even something they see happening this year.
It was quite interesting, certainly on the European airline calls. Ryanair was among the first to present their results for the quarter, and Michael O'Leary was talking about expecting a kind of a dampening in fares, the high levels that we'd seen falling away a little bit, and everyone was asked that same question on the calls, and all of them said, well, I don't know what he's talking about. We're not seeing anything from our side. I can't speak for Michael, whilst all caveating, as they regularly do, that the booking windows, and visibility is really limited. So it is interesting to see, whether it's glass half full or not, on how long that strong yield environment will work. It was an interesting question on the Lufthansa call. Carsten Spohr got asked around adding capacity as they look to add more capacity back. And this is the same for all airlines. There is a question that has, to some extent, the low-hanging fruit been done. If an airline is restoring its operations, especially with a tight capacity around it, would the focus really be on the most profitable of routes, and then everything else that gets added back is perhaps the less profitable? So there is that question, as we talked about before, around as you add more capacity into the market, it not only has an impact in terms of, overcapacity tends to lead to lower fares and so forth, but also there's an element to which you're perhaps adding back the less profitable routes or starting new routes which take longer to develop. And it was interesting, the Spohr certainly was quite robust in the response in terms of, certainly for them, there are a number of routes. And it is quite a good reminder that, we are, as we come out of COVID, as we come out of pandemic, which, it's still not that long ago in the rearview mirror, that markets were still building up. So he was sort of talking about China, for example, as one of their more lucrative routes, but wasn't, the demand wasn't there. The opportunity wasn't there to add that back. Whereas since that market's reopened, conditions starting to improve on the demand side, then there becomes an opportunity, and that's the same for a lot of Asia. So I suppose there is an argument that just because a route hasn't been added back yet, that doesn't necessarily mean that it won't be quite a good one for the bottom line. I thought that was quite an interesting kind of take on that whole kind of network restoration side of things.
Yeah, I suppose equally there may be, and probably the person asking the question probably partly thinking that in a capacity strained environment, we all know that leisure has been driving a lot of the recovery over the past 12 months, particularly premium leisure. So we're seeing premium cabins busier than ever in some cases. But obviously a theme that people don't highlight quite as much on those earnings calls is that corporate travel is, as it stands, is still has a very long way to go to recovery. So when you talk about those kind of certain routes and having room to come back, I suppose the counter argument might be, well, if that leisure pent-up demand falls away, particularly in the premium cabins, and corporates only 60-70% back to pre-COVID levels, then you can start to see why there might be some concern over where that leaves an airline, certainly on some routes. So again, it's all of this pent-up demand and how does it fall quickly? How hard does it fall? Is all, I think, going to be very relevant. And IAG talked about corporate travel kind of recovery stalled, I think, in the second quarter. They expect it to be up again in the current quarter, but certainly it's in volume terms, particularly nowhere near 2019 levels, even if, as in common with the rest of the cabin, the yields have been pretty decent. So yeah, I think there's a dynamic there where if the leisure travel normalizes in an environment where corporate isn't anywhere near back to where it was, then no one's talking about disaster, I think, at this point, but it is a kind of a more normalization, I think, where those highs fall away and where the realities of the market start to hit home, particularly for some of the carriers that were always on the edge of profitability kind of pre-COVID.
What was interesting also in the US market, you also saw how those demand levels shift into different markets as different consumer habits change and alter. And it was quite interesting. There was quite a narrative around the growth of international travel for the US carriers. For most US carriers, another very successful quarter. But there was a question a little bit as to what extent that had come at the expense of domestic travel.
Exactly, yeah. And again, we talk about, I think there's a sense that, and more than one carrier said this, I think Spirit, Frontier, JetBlue all talked about they were seeing, I guess, a degree of normalization. So the domestic market, obviously the US had been quicker out of the traps from COVID because obviously being a domestic market, it didn't face those restrictions. So it kind of enjoyed, particularly 2022 was a really strong year for domestic travel. And then I think there's a sense among some airlines that that's fading away a bit. So we're not talking about disastrous falls or anything. We're talking about demand and maybe fares moderating a bit. But at the same time, because, this summer, as you talked about, it's easy to forget. Well, it's not easy to forget, but sometimes it's surprising to remember how recently we still had quite significant COVID restrictions and even reticence to travel internationally, because in 2022, we really weren't, Omicron had happened over the winter and we really weren't a long way away from a period where traveling was a real nightmare. So as we in 2023, it's kind of a year where international travel is sort of fully reopened, even with the surprise addition of China to that, even though capacity is way down still. But there's obviously an element that this, certainly in the US market, that this summer is international travel's chance to really benefit from that pent-up demand. I think, like you say, some carriers, so Frontier said it did a survey among its customers, and they saw that there was a genuine shift in people saying they were going to spend money on travel to Europe in particular rather than intra-US travel. I mean, we know there are particular reasons like the strength of the dollar that make traveling, if you're based in the US, to Europe quite attractive at the moment. But yeah, I think that's just showing this kind of normalization starting to ripple through those markets, and particularly one like the US where they were already ahead in the recovery in many senses domestically. That's also reflected slightly in another market in Turkey, where we know that they had a large domestic market that was particularly strong last summer, and Pegasus, the low-cost carrier there, were talking about how the current quarter, so the third quarter of this year, how its unit revenues and I think its results overall are going to look weaker year on year, almost inevitably, because last year was so strong. And again, they're talking about this kind of degree of market normalization. Capacity has come back in despite the challenges we've seen. More markets are now open. And I think the airline industry has gone through a number of years where year on year comparisons always looked pretty good because we were emerging from the biggest ever crisis. But we're starting to see now, I think we'll start to see that in some cases, and I think there already are indications in the second quarter of this actually, that some of that bounce coming out of COVID starts to fade away. Again, just to reiterate, we're not talking about a crisis situation again or anything, but it will start to show through in results.
I think that next stage actually then becomes around to what extent have airlines been smart about their restructuring, been smart about the businesses and the markets that they've gone back into. I think that will become much more evident, and you're starting to see probably more strategic plays emerging. We are seeing that in terms of increased M&A and so forth. To some extent, I think for us covering airline results over the past year or so, it's been quite uniform, because airlines, regardless of where they were in the cycle, were kind of on this upward curve, and some are going at different paces and some are pressing ahead and taking market share, and some had a far more cautious approach and maybe focusing on profit levels. And all around it, there is, the question of, are airlines in better shape to withstand, increased costs and perhaps a relenting in fares and yields, albeit, I think no one fully yet knows where the fares and yields are going to land. And, cargo is, as ever, much further ahead in the cycle. And that, we've seen a succession of airlines report lower cargo yields this time around, cargo revenues this time around. But of course, for most of those cargo, those that have expanded into it, cargo still forms a larger part of the business than it did pre-COVID. The revenues are still stronger than pre-pandemic. And again, the question is, where is that settling point?
Yeah, and it is. It's all about this normalisation. As you say, I think this will be a test, what's coming over the next 12 months. As you say, like, there's been a bit of a false period where we've had these extremely high yields. This, constrained capacity will carry on, I think, for some time, as I said. But equally, I think that pent-up demand will moderate. And it really will be a test of whether airlines did enough during COVID to really get particularly their fundamental cost base, to get that under control, and that's already being tested by the inflationary environment, particularly, and the strong dollar when it comes to particularly buying fuel and all of these factors. And that's what's going to be interesting in this coming period, really. But if cargo, as you'd say, if that continues on its current trend, it won't be long before it is kind of back to 2019 levels. I think in that regard, I think the cargo market's shown that it's in its volatility over the last 4 years, that as much as at times in COVID people were wishing for it to be a kind of permanent structural change, that it would be this bigger part of the revenue mix, that those kind of assumptions are dangerous. And I think while in some cases things like e-commerce will drive some structural change above 2019 levels, I think in many cases we are looking at it falling back to where it was. And that might change again. Who knows what's coming? But certainly there's a volatility there that might make some people maybe regret some of the commitments they might have made in terms of fleet in that area. But anyway, that's again all part of this normalisation. But the real thing is, have you done enough? You talk to CEOs, like you said, and everyone says that they've done more than others to make sure they're kind of ready for whatever the market throws at it. But the test will come, I guess, in the coming months.
It's a slightly weird, like I say, a slightly weird situation where you're getting airlines posting record revenues, record profits in many cases, and it all looks good. And we don't quite know when that normalisation will come. But I certainly thought it was interesting that it was on the radar of airlines in this last quarter.
Yeah, exactly. It sort of reminds me of being a football fan where your team wins the league and you sort of celebrate it for a little while, but then you're very quickly worried about what's going to happen next season, and you quickly realise that you just need to enjoy maybe the high moments and mark them and celebrate them, and then carry on doing your best with whatever the coming season throws at you. I suppose inevitably as journalists we kind of look at the challenges that are coming ahead, but I think we've said before that most airline chief executives would have given anything to be where most airlines are today financially, certainly in terms of the short term kind of revenue cost mix. And as I say, we're not talking about impending disaster, where we're just talking about the realities of we were always going to face the economic normalisation, I think. And it's almost inevitable that some airlines will carry on probably surfing the wave of this pent-up demand for longer than others. But I think it's important to mark that, there is a definite shift in the narrative in some cases. But so lots of things to keep an eye on, as ever. And we'll try not to just focus on the negatives, but because as I say, it's there's plenty to celebrate as well at the moment, I think.
Excellent. Well, we will celebrate some more on More Airlines after the break. So welcome back. And as we said at the top of the show, it's the funny thing about this industry, isn't it, Lewis, that no matter how difficult it is, and it is, at times extremely difficult, there seems to be no shortage of people who want to get involved in this industry.
No, that's it. You sort of you look over the COVID period, so you think that the industry going through its toughest crisis ever, and you still see it throughout the world. There were still examples of people attempting to start up carriers. I mean, obviously, crises bring opportunities in theory. So, in the depths of the crisis, there is a sense that there would be aircraft available. Imagine that from where we are now. But yeah, so that kind of thing. But you're right. I don't know whether it's and being so close to the airline industry, I'm not sure how unique it is to this industry, but it certainly feels like it has more than its fair share of people with ambitions to enter in it. It almost feels like the more consolidated it gets and the more people say this is such a tough industry to get into, there's people who still see that as a challenge and attempt to go into it. But we've seen over the past few days, I guess, some of the challenges that come with doing that.
Yeah, no, absolutely. And sort of from a news topic, certainly in the UK, there was a fair amount of publicity around a plan to revive Monarch Airlines, the UK charter carrier that collapsed well before the pandemic now. And I mean, that was an interesting story because kind of no sooner had plans for the carrier emerged than it sort of had to go on hold a little bit, hasn't it?
Yeah, it seems like, just an hour or two before we recorded, I mean, only, 24, 48 hours ago, this revived business, which was kind of launched in mid-August, were putting out, designs for their livery, and, they're already talked about, aiming to launch next year. But yeah, as I say, in the last hour or two, we've seen a statement on the business website saying its startup funding has run out much more quickly than expected. So it's essentially on hold. And I think the implication is unless they can get a new source of funding in, then that project may already be looking incredibly unlikely to get off the ground. So I think this was an interesting one. I think, it's undeniable that Monarch, certainly in the UK, has some relatively strong brand recognitions. Whether that would be true to the next generation of flyers is questionable, but obviously it's still a recognised brand. It was a big failure when it happened in 2017. But equally, and this is often the case with startups, you have to think about what market they're entering and what they're going to deliver that isn't already there. And I think Monarch is clearly, it's a short haul carrier. That was the plan to relaunch with A320s. It's aimed at leisure markets. And look at the UK market today, for example. We know how strong EasyJet, Ryanair, Jet2 are in that sector before we even start thinking about, BA's growing operation at Gatwick, for example. So I suppose the question is there, what would it bring to the market that isn't already there? That's not to say that startups always fail. But I think it was a slightly baffling one, certainly for me, about what they were going to bring that the market desperately needed, particularly in an environment where the existing carriers are struggling to get enough aircraft and the kind of systems creaking under the pressure in the UK we've seen of peak travel. What was new from a revived Monarch. So it may be that we, I guess, never find out, unfortunately for them.
It's interesting, of course, and in the UK we've had the revival of Flybe, which proved relatively short-lived. In India, we've seen, it's been a pretty torturous path for Jet Airways, an airline which collapsed at a similar time, about a year or so before Flybe. And, again, reviving that business has been on the cards in one form or another. And again, that hasn't been an easy berth. That carrier has actually just had its AOC renewed, which gives it further optimism for hope. Coming back to a similar point, in India, what happens is other carriers move in. Indigo's got stronger. They've continued to take share. You have the revamped Air India in this case with Tata, and you've got Akasa, a startup, which is sort of hungrily operating in that space. So while these established names and brands have a value, the market around them does change. The other thing that's been interesting about some of the startups we've seen is that they're kind of, you can see traces of former models, but in certain aspects you have a twist and a play on them. So if you pardon the pun on that, Play is a very interesting airline, the Icelandic carrier, which was very influenced by WOW, of using a chunk of the WOW business and operation model and focusing on that rather than the wider elements. But then you have another startup, an airline which we're expecting to launch flights as we speak, which is Bermuda Air. That's an airline that is looking to revive the all premium model.
Yeah, and the all premium model is one that's always fascinating. You sort of on paper you think, well, this can make some sense. I think in that case it's quite a a very specific market there, serving Bermuda from the US. So, quite a leisure focused market there. And I think when you look at all premium elsewhere, as I say, on paper it seems to make some sense, but I think often we've seen BA dropped its small all premium operation, I think at the outset of the pandemic. I think La Compagnie, and the French carrier, is making some success of one or two routes in its network between Europe and North America, but as a model it's never really had much traction. I think when you're talking about the Bermuda markets, it's going to be very different from some of those others I was just talking about. So I don't know if you'd take much from what's happened before there, but I think there is undeniably when the all premium model does bring some challenges around. That lack of revenue mix means you're quite vulnerable. Say in an economic downturn, for example, when you don't have the option to pack people into an economy cabin. In other cases as well, I think when you think about corporate markets, for example, I think a lot of corporate travelers will value the flexibility that comes from the multiple frequencies that standard aircraft will be flying, for example, on transatlantic, where if your business meeting overruns, you've got the option to move on to a flight 2 hours later, whereas these small sort of all premium operations tend to be kind of one flight a day sort of operations which don't offer that flexibility. So yeah, there is a niche market there.
Another example we've seen, there's been quite a lot of headlines over the past couple of months, and headlines understandably because the Airbus A380 is involved. So we have this UK startup idea, Global Airlines, which is looking to start services next summer, transatlantic from Gatwick to New York and to Los Angeles using A380s. Now that's that is a market people haven't been in a rush to get into using the A380. But, as ever, you find people who think they can create a different market or a different model where they can make it work.
Yeah, that will certainly be an interesting one to watch. It's a fascinating idea. Objectively, you will look at the fact that quite a lot of airlines are at best, slowly phasing out the A380s if they haven't dropped them altogether. And those are airlines that in many cases would have had feeder into their hubs to feed those A380 flights. The kind of point-to-point idea from somewhere like Gatwick with a huge aircraft that's costly to run is a starting point that sounds a bit scary on paper, I would say. So, there's a reason why these aircraft are kind of on the decline in many markets. So, yeah, it's interesting to see if they can get that off the ground. And again, it's kind of I think what you can say for them is they are doing something a bit different, I guess.
Yeah, I mean, that's exactly the point, and a lot of these carriers are seeking to try and find that niche. And it reminds me a lot of Norwegian, when Norwegian went long haul, real pioneering stuff. And in fact, Norwegian, as it turned out, may not be the airline that's lived to make the most of some of the pioneering work it did. Norwegian has kind of restructured, found its feet again, but very much focused on the short haul, and a very different model from the one that expanded on bringing low cost long haul to transatlantic. And that's had a much wider impact than perhaps, Norwegian itself didn't benefit. But that someone like Global is looking at operating transatlantic out of Gatwick is perhaps another example of one of those, the legacy of Norwegian.
It is, yeah. I mean, and like you say, the interesting thing about Norwegian is that its impact wasn't so much, it didn't necessarily make a particularly big financial success out of its long haul operations, as the years of restructuring it's gone through demonstrate. But what it did do is shake up the market, and what someone like Global could do if they're selling 580 seats on a transatlantic flight is the impact it can have on competitors, even if it isn't filling that aircraft, which it clearly probably needs to do to be a success. The impact it can have on competitors is still quite significant, because you chuck in, if they've got 3 A380s, for example, flying out of Gatwick, what's that, 1,500 seats, whatever a day, and that's a huge addition to a particular market, and it will almost certainly drag fares down. I guess they'll be expected to take some traffic that might otherwise have gone through Heathrow. So these startup, even if they aren't successes in their own terms, can have or disruptors, sorry, in the case of Norwegian when they went long haul. The nature of being a disruptor is you have an impact perhaps on other carriers more than you necessarily make a success of your own business. And of course, interestingly, IAG were at one point, I think, relatively close to acquiring Norwegian. And of course, the launch of the Level business, for example, was seen as a defensive move. You know, they could see those yields being affected on their transatlantic routes and needed a kind of response to that. So that, and that's another example where this airline starting up at Gatwick with a fresh idea on how they're going to do things may prompt a rethink for some carriers on what they do out of Gatwick, for example. And of course, talking about Gatwick and long haul, while we've seen some of the more legacy carriers leave that market to an extent, we've also got Norse Atlantic in there, who are kind of the Norwegian successor carrier. People who were involved with Norwegian pre-COVID are involved in that carrier, and they are doing wide body long haul services across the Atlantic from Gatwick. So from that point of view, global airlines won't be on their own. I think it's fairly early days for Norse Atlantic still. All the more reason why global airlines, I think, by chucking a load of capacity into the market will shake things up, I think, whatever happens.
You touched on it earlier. I mean, we did see, slightly counterintuitively, we did probably see more airlines start up than we saw collapse during the immediate aftermath of the pandemic. As you say, I mean, I suppose that's because many carriers were on kind of life support, which probably, in some cases maybe extended their operations. And exactly as you say, you could get aircraft at that point. And it is interesting, you see in the US, carriers like Breeze and Avelo started in the aftermath of the crisis, and we've at Flight Global, we've just spoken to a couple of airlines who recently started in. So we have Starlux, the Taiwanese carrier. That's an airline that launched, I think, in January 2020. You couldn't get a much worse timing for launching. But, over the past year or so, they have been able to grow. They continued to bring in aircraft. They've got new Airbus aircraft coming in, the A320neos. They've got H350s. They've started operating on that Trans-Pacific route, so linking Taiwan to Los Angeles. And that's a crowded market to be in. But, again, they see an opportunity there. They see an opportunity for transit connections in particular, transiting through. So probably not just the Taiwanese market. But it is interesting to see that these projects carried on. And, in Australia at the start of the year, quite a big launch there, Bonza, which came into the market, and, a domestic operator there. It's quite interesting that the airline actually trimmed back a few of its routes, cut a few of those back. But as the chief executive was saying, it's actually, when you think about the number of routes they launched, I think it was 27, they were actually cutting single digit percentage capacity. And, that's pretty normal for a kind of low cost churn. And, I think what's interesting in that case is, you've got an airline which is, most of the routes they're operating on are uncontested, are unique routes. And so, they're trying to, to some extent stay out of the way of the main competition. I guess, something that Volateer maybe has done in Europe, and sort of create new markets. I think you can never tell which of these airlines is going to find the right market at the right time and have the right model. But what's clear is that there are always new players willing to try something.
And that's the thing, yeah. At least I think in the case with Bonza, you can see, as you say, there's when you talk about what is the 30-second pitch, whatever, for the airline, it's, as you say, Volateer is probably a good example in Europe of a sort of equivalent where you're attempting to connect secondary airports that aren't connected by the incumbent players. And, on paper, there's a story there and something that theoretically could, be financially successful. We know that that's not guaranteed. The airline business is notoriously low margin, and in many cases there may be a reason why markets are unconnected by the incumbent players. It might not necessarily just be that they don't have the capacity or will to move into them. But I think in the case, as you talked about with Starlux, the other thing is they're kind of pitch themselves as a boutique sort of premium carrier. So they're, as you say, on the Trans-Pacific market, while that is quite crowded, they're at least trying to bring something a bit different to it. and it's a growth market as well, but bringing people into Asia via that route. So there's kind of a story there. But that said, of course, just because you find a niche, or you think you've got a USP, or it looks good on paper, so we look at Redway in the US, so only started flying a few months ago. Their kind of pitch was to be they saw an underserved market out of Lincoln, Nebraska, where they felt that there was a big enough local population to sustain a carrier. People were traveling to airports further away. They were kind of they handled all the customer facing stuff. They were using Global Crossing for actually operating the flights. But they failed in the past few days, ceased operations, and pointing out the supply side challenges and the costs of doing business at the moment. And as we talked about in the first half, I think the high costs of being an airline at the moment, as much as yields are decent, I think as a startup you're going to feel them even more strongly. Leasing costs, for example, everyone wants leased aircraft at the moment, so you're not going to get anything bargain basement there, I think it's fair to say. So, but yeah, I think Redway show that finding the niche is clearly not always enough.
No, it remains a challenging market, no doubt about it. Okay, I think that's where we will leave it for this week. Lewis, thanks for your time.
Thank you, Graham.
As a quick reminder, you can please subscribe to the podcast if you've enjoyed it, and we would love it if you would leave a review. You can, of course, look at all the stories we've talked about today on flightglobal.com, and we will see you again next time.